Hi, Professor. My final project topic is for ACC for 10 Advanced Accounting, translation versus remeasurement of foreign currency financial statements. This topic is important because the multinational companies often they operate in different countries and they must report the foreign financial statement in one reporting currency. That's why I chose this topic. Here's the agenda. Introduction, like same as usual. Mm, Okay. Um, Multinational companies may have subsidiaries that use the different currencies. So before the parent company can prepare consolidated financial statements, the foreign subsidiary's financial statement must be converted. To do that, the two main methods are translation and measurement, remeasurement. Um, my thesis is that the translation and remeasurement are important because they determine how foreign currency financial statements are converted and the how exchange rate changes are reported in the financial statements. And the purpose of this presentation is to explain the both methods um, and compare them and show why they matters in the world. Mm. The uh, the main accounting issue is it's hard to choose between these methods. It's hard to choose the correct method because um, this depends on the subsidiary's functional currency. If the wrong method is used, it can affect the reported net income, equity, and financial statement and analysis. So accountants must understand exchange rate effects. Okay, so translation is used when the foreign current subsidiary's local currency is the functional currency. The remeasurement is used when subsidiary's local currency is not the functional currency. In translation, assets and liabilities are usually converted using the current exchange rate, whereas in remeasurement, monetary items use the current rates, while non-monetary items often use historical rates. So um the main difference is where exchange rate effect is reported. Or like translation adjustment go to the other comprehensive income and equity, while the remeasurement gains or losses affect the net income. So depending on the method used, it can affect the reported income, equity, financial statements. Hmm. If a US company owns subsidiary in Europe and that subsidiary mainly operates in euros, of course, so the translation would usually be used. However, if the subsidiary mainly operates in US dollars, remeasurement may be required. So this decision affect how exchange rate changes affect and appear in the financial statements. So which is very important to understand this subject. Why this is matter? Um, this topic matters because Many companies operate internationally, globally, and then investors, creditors, and managers need accurate financial statements, informations. Uh, Translation and measurement help companies properly report the foreign operations and avoid misleading financial statements. So it reduces misleading financial reporting. Mm. In conclusion, translation and remeasurement are important parts of multinational accounting. The functional currency determines which method is used. Translation usually affects equity, while remeasurement affects net income. So this topic helped me understand how global business report the foreign operations.